All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Fundamentals are my guardrails when it comes to gold and silver. And right now I'm paying attention to not only the general contraction that we have right now in the economy, but also the media highlighting it. Because the more news density coming in that amplifies a worsening economic outlook, the more traders and investors respond accordingly to that. Now, that will impact gold prices, particularly over time. As we've already spoken about how, for example, gold ETFs are one of the main drivers in gold price movements. So let's see what's on the horizon for the economy. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so welcome to the W-shaped recovery. So we're actually going to skip down to Jim Rickards' section here about the Congressional Budget Office. Now, before we get into this section, what he means by a W-shaped recovery is that it's basically going to be down and up, and those are what the prospects are moving ahead in his outlook. So let's get started here. The Congressional Budget Office is the official referee of budget deficits or surpluses for the U.S. Congress. Its views are also closely watched by the White House since spending and tax bills have to move through Congress anyway. CBO earns a lot of respect and deference in part because they are nonpartisan, although like everything in Washington, they tilt left and expert. They have a lot of budget geeks who don't get too involved in politics away from their CBO duties. That said, there's a lot to disagree with in CBO estimates. The first thing is that their budget deficit estimates are consistently wrong. Deficits come in about $200 billion or more, worse than CBO estimates year after year. The second thing is that they compute a debt to GDP ratio, a critical gauge of fiscal solvency and investor confidence, without counting U.S. Treasury debt held in Social Security's trust fund accounts. They only look at debt held by the public. That's ridiculous. Do they actually believe that the Social Security Administration doesn't rely on Treasury debt being paid on time and as agreed in meeting obligations to retirees and orphans? The difference is significant. When you count all government debt, the debt to GDP ratio is around 135%, which is well in the danger zone, anything greater than 90%, and puts the US in the same league as Greece, Italy, and Lebanon. If you count using the CBO method, the ratio is 98%. That's still dangerously high, but not quite as scary. Even using rosy scenario projections and not counting debt held by Social Security, the CBO is sounding an alarm. CBO actually uses the word unsustainable in describing the path that the federal deficit is on. They say that by 2050, federal spending will be 31% of GDP, but federal taxes will only be 19% of GDP. That's a budget deficit of 12% of GDP. We're looking at multi-trillion-dollar deficits as far as the eye can see. Many critics yell about the fact that we can't pay off the debt. Actually, you never have to pay it off. You just have to roll it over with new debt. That's what analysts mean by sustainable. When debt becomes unsustainable, it means you're heading for a crack up, which includes either default, restructuring, or high inflation. Take your pick. They're all bad outcomes. CBO is saying one of those outcomes is heading our way. Can monetary or fiscal policy lead us out of the new depression? So, guys, that's why I'm basically long gold and silver here. The writing has pretty much been on the wall. And the one criticism, the one criticism I will make is that we won't actually have a recovery. We didn't even have a true recovery after 2008. We truly, or I should say, if we actually recovered, more and more of our people would be less and less burdened by the amount of debt that they are. Essentially, at the start of every business cycle, we enter into this de facto wrestling match with credit. Because we don't really understand how credit works, it winds up kicking our butt by the end of the cycle. Then, at the end of the match, we say, how did I lose the match? Oh well, must have been a fluke. Let's just get back in the ring and fight again. And then the cycle continues. You know, it reminds me of that phrase by Sun Tzu in The Art of War, which is basically the battle is won before it begins. And until we actually understand what money is, A, and what credit is, B, we will keep getting our butts whooped by credit, just time and time again. But guys, let me know what you think about all of this, about, is this path sustainable or unsustainable, as the CBO says? Let me know in the comments section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.